Just a second to get going.
And will I be able to see questions on here or no? Hi, welcome to our credit tip webinar. I'm Rob Sealander with the Nevada Business Opportunity Fund and the Nevada Women's Business Center. And today I'm going to be talking about credit, basically how you can build it up, some good tips, some do's and don'ts perhaps, how you can maintain that, and some things that you can do if you do find yourself in a situation where your credit needs to be repaired. We all know things happen, and sometimes just knowing what you can do and what not to do can make all the difference in the world. So the first thing we're going to touch on is building your credit. A lot of people don't have credit. Maybe they live basically in a cash-based world. But if you're going to go for lending, if you're going to be purchasing a car, doing anything like that, even getting an apartment, for example, you're going to need credit. So if you don't have credit, there's two ways you can go. There's two ways you can go about it. You can either get a credit card, a secured or unsecured card. And a secured card is something where you put a deposit down, you get the card, but your deposit actually covers your maximum available cash or available credit that you can actually use on that card. So for example, you get a $300 secured credit card. That means you put down a $300 deposit. So no matter what happens, the bank is actually covered. Usually after a year or so, they will convert those over to an unsecured card depending on your payment history. An unsecured card, if you can get it, is just basically you apply for it and you get the card. Another really good way to start out if you're building credit is if you have a partner, a parent, who is willing to add you onto their card, because then their credit history will be pulled into your credit report, at least for that card. And that can be a really good way to sort of jumpstart or fast track your credit. But when you're going for a card, you want to be selective. You want to make sure that you're not just going to use your card all the time and overuse it. And we're going to get to some of those limits and stuff in a little bit. But you want to make sure that you actually do use it. So I think cards like a gas card, something that you need a couple times a month, but you're not really going to have the temptation to go out and have a night on the town or book a trip or something like that with money that you may or may not really have. I also suggest that you start with a low amount and get used to credit. A big mistake a lot of people make is treating their credit card as though it's extra cash. So they're spending money that they really don't have. My advice is spend what you can that you know you can pay off at the end of the month. So I treat my credit cards like a debit card. So even though it works a little bit different, I don't put expenses on there, barring emergencies, that I can't pay off at the end of the month. It's just a good habit to get into. I read somewhere that Americans have an average of something like $20,000 in credit card debt. That's not really a good place to be, in my opinion. And keep your credit cards, you want to keep them on a budget. Just because you have $300 limit or $1,000, $2,000 limit, that does not mean that it's really open season on shopping, traveling, eating out, and doing all those great things. Because what you really want to do is you want to show that you can be responsible with credit. And what that means, let's say you've got a $2,000 credit limit. The banks really want to see that maybe you're spending a few $100s here, a few $100s there, but you're never really going above a certain amount. Let's say like 30%, which is the typical rule. They want to see that even though you have that credit available, that you have the restraint, you have the discipline to not tap into it all the time, to not abuse it, and to use what you have responsibly. So what you really want to have is what's called a low debt to credit ratio. Typical rule of thumb, you want to keep that below 30%. So again, if you've got a $1,000 credit limit, you want to keep that card really no more than $300, $330, because otherwise it starts looking like you're being irresponsible. So that's one thing you want to keep in mind. You also want to understand the interest rates and how they work. Some credit cards bill you interest from day one. Some credit cards might have 0% interest for a certain amount of time, and there might be certain criteria you need to meet. For example, there's an electronics company, a national chain, where you can get 0% financing, but that purchase has to be at least $500 or more to qualify for 0%. And you have to do that in one transaction. You can buy multiple things, but that one transaction has to be above a certain amount. So if you are spending money and you're using your credit card and you're expecting that 0%, you need to make sure you're meeting their criteria, or you can have a little bit of a surprise when that bill comes. You thought there was no interest and suddenly there's $20 or $30 worth of interest. So that's just something that you really want to keep in mind. You also want to check on credit card insurances. A lot of credit cards are now offering protection that you can pay for. Sometimes it's just $1 or $2 extra a month. And in the event of unemployment, in the event of an accident or any other reason why you may not be able to pay, that insurance can actually kick in for a period of time. So let's say you break a leg and you're going to be out of work for a couple of weeks, so money might be just a little tight. That you can talk to your credit card company, that insurance can kick in and cover that payment for a month or two. Now, that's something again that you'll want to look at. How does that work? What does that actually cover? But I think it's a really good idea because life happens and you really want to make sure that you protect your credit. You don't want it to be vulnerable to every little thing that can possibly go wrong in life. So once you have credit, you really want to be diligent about maintaining it. One of the best things I think that has come out in a long time is Credit Karma. There are other monitoring software out there, but I think it's a really great way to check where your credit score is, also protect yourself from fraud. If somebody's applying for a credit card on your behalf, applying for an auto loan, mortgage, anything like that on your behalf, those things can show up. If somebody has looked at your credit, it's been my experience that on Credit Karma, within hours, you can actually see that somebody has checked out your credit in a lot of cases. And that's really a great thing that you want to do, because working at the Nevada Business Opportunity Fund, quite often I've had people come in and they start talking about charges they didn't make and car loans they did not apply for and things like that. And even though they may be telling an accurate story, we as a lender can't do anything except look at what's on the credit report. So until it's been proven, until it's been taken off, or until there's letters of correction, we can't go beyond that and say, okay, well, as long as you've told us that story, it's okay, and we'll go ahead and do the loan. We actually have to go, what's on paper, that's what we have to go by. Same thing with tax returns. So to that, another really good way to build up your credit score really quickly, whether it's new credit or whether you're existing or even you're coming out of a situation where maybe you have some late payments and your credit took a few dings, and that is to pay more than the monthly payment. So that's something so let's say, for example, you've got a monthly payment of $25 on a credit card. By just paying $1 more, it puts you into a completely different space. So there's all these algorithms out there, and when you're paying your exact monthly minimum, those algorithms basically say that you're hanging on by your fingernails, you could be bankrupt at any moment, you're heading down to a pathway of destruction, and it doesn't really help you improve your credit score very quickly. But by paying $1 more, suddenly that same algorithm says you are flush with cash, you've got money to make all these extra payments, you can do all of this stuff, therefore you're a better credit risk, therefore your credit's going to go up a lot faster. I know it doesn't make much sense with just $1, but that's the way that the process works. And like I said before, you want to stick to the 30% rule. And that is that you don't use more than 30% of your available credit ever. And not just your available credit, but you have to monitor that per card. So let's say you've got 3 cards and you've got $1,000 of credit per card, right? So you've got $3,000 of available credit. If you put $1,000 on one card, that's going to show a really that's going to show 100% utilization of that one card, and that is going to bring your credit score down. Now, if you were to do, let's say, $330 on each of those three cards, you spent the same amount of money. However, on each one of those cards, you are at or below the 30% usage. And therefore, your credit score does not get dinged in the same way and actually can even go up. So you really want to make sure that you keep that in check, especially if you're going to be carrying over balances. And to that, what you want to do, a lot of people will put stuff on their credit card, and so they'll put it on, let's say, today, and they'll pay it tomorrow. You don't necessarily want to do that. What you want to do is let the statement run, and then pay it off. So you'll still meet all the criteria, but once the statement runs with the balance, that gets reported to your credit agencies. If there's no balance on there, your credit agencies are basically going to look at it like you're not even using your credit card, when in fact you actually are, because they're getting reported zero balance, zero balance, zero balance. So you want to find a way to use your card, use it responsibly, yet don't let it get out of control. And to that, after that, so you've set up your credit, you've been maintaining your credit, but let's say something happens, because things do happen. So let's say you end up with accounts that go 30 days, 60 days, 90 days late. Right as the moment you know that you can't make a payment, or that you're going to be late on a payment, or that there may be something that jeopardizes that payment agreement that you have with the creditor, you want to reach out to them. Don't wait for them to call you. Reach out to them and let them know what's coming up. A lot of times they can waive maybe that 1 month payment, or they can postpone it. They may let you know that, yeah, your insurance, they'll kick in the whole insurance process. That'll take care of it maybe for that month. There's a lot that can happen. What they don't like is when they have to reach out and it's not getting paid and the phone call's not being answered. That all of a sudden tells them there's a bigger risk there. And maybe there's not, but that's what it looks like. So you really do want to have that communication open. And if you should have something that goes into collections, you want to make sure, again, you have that communication. Get on a payment plan, get some sort of agreement, and stick to it. Because if you have something in collections, it doesn't matter if it's in collections for $10. If it is in collections, you are going to have a hard time getting credit at other places. Because a lot of times we don't necessarily, sometimes we look at the amount, a lot of times we don't, but if you've got stuff in collections, especially when it's a low amount, the way a lender sees it, the way a creditor sees it, if you can't pay that $10, $40, $50, $200, how are you going to pay the loan, the car payment, or all the other things that you're actually trying to apply for right now? So you really want to make sure that you manage that. And again, life happens. People know this. Creditors know this. Lenders know this. Even for us, we are happy to work with a business if they have a bad month or so, but they have to come and bring the communication to us. They have to be open about it and not wait until a payment is missed or a second payment is missed and they don't answer their phone, because that sets a whole process into play that really we all want to avoid. And one thing that you want to do too is when you have small amounts that are, maybe you're disputing the bill, and maybe what I'm going to say is a little controversial, but I would say pay those off. I see a lot of times people have things in collections for $80, $120. If you have the money, my advice is pay those off. Yes, maybe you really don't owe the $80. Maybe you really can dispute it. My advice is pay it off and then dispute it, because the problem is, or the thing you need to think about is that $40, $80, $150, is that argument worth dinging your credit to a point that you cannot get the credit or the loans that you want to get. Is that $40 really worth all of the consequences that could come from that? So I'm not saying let people take advantage of you. I'm not saying just pay whatever comes your way, but I would say pay it with a letter saying, I object to this, and then go through a different process. Because yes, it might take a little bit longer, but your credit is not going to suffer as a result. I made that mistake. A lot of people have made that mistake. You really don't want to do that. So pay those small amounts off. And then, like I said, work with your creditors. So if you've had, let's say, a bad few months, a lot of times your creditors will work with you. They might take something off your credit report as a complimentary one-off thing. If they can see that, yes, you had great payment history, then oops, something happened and now you've had great payment history again. They may or may not be willing to remove those one or two late payments off your credit report, but it never hurts to ask, right? It's already there. If they take it off, great. If they don't, then at least you know it's there. But keep in mind that those late payments are going to actively impact your credit report for about 2 years, and they're going to remain on your credit report for about 7 years, if not longer. So you really need to protect your credit, and you really need to work with the people that are giving you the credit, giving you those loans, and providing you with the access to that money, simply because you want to be seen as a responsible person. You want to be seen as a responsible business owner. So I'm going to switch gears a little bit now and talk about what we look at here at Nevada Business Opportunity Fund and VEDC. We do business lending, and one of the things that we look at is one of the first things we look at is your credit report. Now, there's two ways that financial institutions or creditors look at a credit report. One, they're going to look at your credit score. That's the most common way. That's what most people are used to. And the way it works is there's basically 3 bands. So if you're here, the answer is an automatic yes. If you're in the middle, it's a maybe. And if you're below a certain number, it's an automatic no. And they don't really care what the reason is. It's just a no. Most institutions are very strict on that number. We are not so driven by the number. What we're interested in is your credit behavior. So, for example, like I mentioned before, let's say you had great payment history. Then all of a sudden there was an accident or a family emergency, something happened, maybe you were laid off, and for 3 or 4 months everything was just a disaster. Then after that, things got back on track, and since then you've had good payment history. We can work around that because that is a blip. That is a very specific time frame in life. That is very different than looking at somebody who has had 8 credit cards. 7 of those 8 have been in collections. They have been charged off. Cars have been repossessed. Because the difference between those two is that one is showing good payment character, and the other one is showing what looks like intentional bad behavior, bad character. So when we look at the person who has all the on-time payments, they had a blip in on-time payments, I'm going to trust that person. I'm going to assume, especially when they explain why they had those late payments, why that little blip on their credit score, I'm going to assume the best, and I'm going to push for them to get the funding they need or whatever else that they need. But if somebody comes to me and there's all these other things on there, I don't really feel that comfortable going to bat for someone if it looks like there's a 90-95% chance that we're going to end up on that credit report as an open collection or a charge-off. That's just not something that I feel comfortable doing. It's not something our team feels comfortable doing. So you really want to know what's on there, because when you go to a lender, if you come to me and we have the conversation, you need money for your business, one of my first questions to you is going to be, what does your credit score look like? What does your credit look like? What's on there? Is there any collections, any charge-offs, anything like that? Bankruptcies in the last 3 to 4 years, foreclosures, anything like that. Now, we can work around a lot of stuff, but again, it needs to look like it's a blip, not necessarily behavior. The other thing that you want to do is when you talk to a lender and they ask you credit questions, be honest, be transparent. Because when people come in and say, I have great credit, there's nothing on there, and then we run the credit and there's things actively in collections, there was a home that was foreclosed on, let's say a year ago, people don't forget those things. A late payment 2 years ago, oh yeah, I forgot to mention that one late payment. That's fine. But when it comes to the big things, we know that people know what's on their credit score because those things are on the credit report because those things don't just happen. There's a whole process. So if you're in collections, you've been getting phone calls, you've been getting letters, you've been maybe getting emails and all these other things. People know what's going on. So you really need to be honest and have that transparency with us. The other thing that you need to keep in mind is federal debt. So federal debt is money that you owe to maybe the IRS, money, let's say student loans that are still open. We cannot fund anybody that is default in federal debt. And federal debt is something that does not ever go away. So you can file bankruptcy 3 or 4 times over the course of your lifetime. That federal debt is never ever going to go away. The only way to get rid of default in federal debt or to take care of that is to pay it off or get on a payment plan or work something else out with the IRS or wherever you got that loan from, because that is something that we absolutely cannot budge on. You could have great credit, but if you've got that, that is going to be your roadblock. And unfortunately, it's not really our policy to do this. It's just the way the industry works. We are partially federally funded, so therefore we can't do anything with federal debt. And you'll find that most lenders are going to be about the same. So that basically wraps up our webinar on credit. Just some credit tips. I hope it was informative. I hope maybe you learned something. If you want to talk about it, if you have questions that maybe things I didn't cover, you can give us a call at 702-734-3555. You can go to our website, which is nevadawbc.com, and contact us that way. And we look forward to hearing from you. And if there's anything that we can do for you for your business, let us know. We host the Nevada Women's Business Center, where we give free training, counseling, and support for anybody looking to start a business, thinking of starting a business, and maybe not really sure if you should or shouldn't or what's involved. We also help people grow their businesses. We can assist with things like getting government contracts, getting certified as a woman or minority-owned business. There's a lot that we can do and help you with your business. Our services are free. That is funded in part by the SBA. So please use our services. They are free. In fact, if you pay taxes, you have already paid for our services. It's a really great way to put your tax money to use actually for you. And that's basically it. So we'll finish off today and look forward to seeing you next time. Thanks very much.